173. Keep your stop loss below 165 and you can set the target of 195. I think the stock can test 195 in next 1 or 2 weeks time.
Manas, just stay on. We need to go across to Mr. Sunil Duggal, CEO of Dabur India, who joins us on the show to talk about the earnings. Mr. Duggal, it's great to have you. Yes, you can go through your papers, sir. It's a good time to talk about how business is shaping up. Volumes has been disappointing. The GST impact seems to have hit the demand side of the equation, but you still fared a bit better than peers. How would you really sum up the experience for the quarter and what it means for demand outlook into the coming for the rest of the year?
Well, it's been a challenging quarter. The domestic market was impacted obviously by sharp downstocking in all trade channels consequent to the implementation of GST in June. So we were off to a good start in April and May, but the June numbers obviously were much below par. So aggregate, I think the underlying demand seems robust, but the trade channels still are under a fair amount of stress. It'll probably take the best part of this quarter for the whole business to rebalance, and hopefully from the second half we should see better numbers coming in.
I mean that Q2 as well. I mean through the month of July, have you seen restocking in trade channels clearing up, or Q2 will also be impacted by lower volumes? And if so, what kind of a volume hit can we expect in this quarter?
Well, we haven't seen much restocking, and but that's not the underlying issue. I think there's still enough inventories in the system to support sale. The good thing is that the underlying demand, as I said earlier, was still fairly robust. So as and when the trade channels rebalance, we should see good consumption happening right down the whole supply chain. But at this point in time, we are busy in terms of trying to align our channel partners, particularly the wholesalers, to comply with the new GST regulations and helping them to rebalance their business. So I think it will take a month or two for that to happen, and once it does, then hopefully on the back of a good monsoon and other economic factors, we should see robust consumption coming in the second half of the year.
Afternoon, Mr. Duggal. So what's the outlook on the pricing strategy post GST?
Well, at this point in time, there would be no pricing action in terms of up and movement of prices. We have been selectively taking prices downwards where there's been a net beneficial effect of GST in oral care and hair oils in particular. I think some pricing action may commence in the third quarter if the input costs rise. If they don't, then I don't see much pricing action happening in this year. So at this point in time, the raw material environment remains generally benign other than a few pockets of inflation. Let's see how the outlook is, and we'll take pricing decisions in the third quarter depending upon the input costs and the impact on the whole value chain.
Right, but just to sum up this angle of the discussion, because it really talks about the top line performance for your business, how at this stage, and I know that these numbers might change, so I'm not going to be holding on to these numbers as we go along in the second half of this year, but what kind of guidance or target can you lay out in terms of how much pricing would go up by in the second half, as also what kind of demand or volume growth pickup do you see in the latter part of the year?
As I said earlier, I don't see pricing to be a big trigger in terms of moving the top line. It will really be volume growth, and perhaps 80% of our top line will be driven by volume and just 20% by price. So the whole initiative is, and the whole focus of the management is on how to get top line moving into, if not double digits, at least in the high single digits in the second half of the year. I believe that is possible because, like I said, there is underlying demand. And the pricing will follow its own path. So we don't have any pricing strategy as such in terms of how much we'll take our prices by. Like I said, it's contingent upon input costs. Second quarter, there'll be no upward price action. There are issues, obviously, with regard to anti-profiteering, etc. But even so, I don't think the market today will support any increase in prices. We'll have to wait till October or November or thereabouts.
And how did your international business perform? Was there any pressure on account of the Middle East region?
Yes, there is. I think we have an issue in Saudi Arabia, which is slowly, I won't say coming back to normalcy, but is behaving better than what it did the last 2 or 3 quarters. But it'll take time for Saudi Arabia to come back to its old growth story. We had an additional problem in Qatar. As you know, there was an embargo on import of products into Qatar from the neighboring states. Qatar is not a very large market, but a very profitable one, so there was some impact on account of that. And we are trying to now navigate those issues by sending stocks from other countries. So hopefully in the second quarter, Qatar will come back to normal. But the key issue, and that had almost 100 crore impact in terms of translation losses in terms of our top line, is the currencies in Egypt, Turkey, Nigeria, many other parts of the Mid Eastern and African regions. That is leading to a sharp erosion in terms of our top line, like I said, to the extent of 84 crores this quarter, and also some impact on the bottom line. So there was a 10 crore impact in terms of our bottom line consequent to the currency devaluation. Now, this currency devaluation impact will continue into the second quarter because most of these currencies came down in around November of last year. So till we anniversarize that, which will happen in November this year, in the second part of third quarter, we will continue to feel some translation pains, both in terms of top line in particular and also a little bit on the bottom line. So I think the international business will really see growth coming back around the middle of third quarter, and then we should have a reasonably smooth sailing. There is a caveat though, in case the currencies further devalue, and there's no evidence of that because they have been reasonably stable for the last 6 months, that would put further pressure on the business.
Would you say on the whole that you've gained market share this quarter, specifically in your oral care category, which has been doing well?
Well, oral care, we've gained some share. We have regained some share in honey, which we had lost. Hair care shares are fairly stable. Hair oil shares are fairly stable. So overall, there's been not any dramatic movement in market share this quarter. But then, like I said, this is not a normal quarter. Only when the whole rebalancing happens, then market share measurements would be accurate.
So, is there any clarity on what happens to the excise benefits enjoyed by companies locating their units in the tax holiday zones now?
Well, the excise benefits reduced by 42%, so that is a downside which is consequent to GST. We are still hoping that the government would reconsider its stance, but as it currently appears that there would be a shrinkage in the terms of the quantum of excise benefits which we are getting. But they would be to some extent mitigated by the positive impacts of GST. So overall, GST would not have any significant negative or positive impact other than a one-off impact which happened in the month of June, for which we have already provided for. If you notice, we've taken around a 15 crore exceptional hit in our books on account of payment to dealers and distributors, etc., to compensate them for the loss of input credit on their inventories. So that's a one-off impact which is obviously consequent to GST, but otherwise if you take a 9-month view, GST would be largely neutral. There wouldn't be any significant impact up or down.
Mr. Dugal, despite whatever has happened on volumes and pricing this quarter around, your margins have still kept to the baseline of 17%. Suffice to say that, if things look up, which you hope they will in the second half of this year, that margin expansion is very much on the cards because you managed your input cost pressure as well.
Probably not. I think we are pretty happy with the margin profile which is emerging today. Optically, there would be further improvement in margin because our top line would shrink consequent to the treatment of revenue under GST. So the margins might even improve further, but that would be only optical. The whole endeavor, like I mentioned earlier, is to get volumes back into the high single-digit or double-digit revenue line, the growth line. And to that extent, if we are able to maintain a reasonably stable margin profile, we'll be happy doing that, if it is not at this point in time to increase margins.
Dugal, for joining in, giving us clarity on what the outlook has been with the GST experience, your international operations, as well as your volume growth. The stock price of Dabur, it's currently holding out at 307. We're currently trading at 10,044 on the index, a small